Think about what happens when you get seriously sick. Normally, your brain is filled with 100 different worries: your job, your relationships, paying the rent, getting a promotion. But the second you get a serious illness, all of those big plans and ambitions instantly disappear. You only have one thought left in your head: how do I survive? Trading operates on the exact same law. When your account is green, the market is calm. You obsess over complex strategies. Should I use price action? What time frame is best? Which indicator is the holy grail? But when the market aggressively turns against you, when a massive losing streak hits, and you wake up to see your account down 50%, all those complicated questions vanish. You are left with one desperate thought: how do I survive this? Welcome to Market Sector. Today we are talking about the brutal reality of the financial markets. We are going to explain the math of rune and show you why the most boring concepts in trading is actually your ultimate superpower. Let's dive in. Act 1: The math of rune. Most people think you have to be an absolute genius to make money in trading. You have to predict the future perfectly. That is completely false. Most traders do not leave the markets because they are stupid. They leave because they run out of money or they run out of mental energy. You can trade perfectly for 6 months, but all it takes is 1 week of overtrading, one time going all in, or one time refusing to use a stop loss, and your account is gone. In trading, once an account is damaged too badly, recovery becomes almost mathematically impossible. Look at these numbers. If you lose 5% of your account, you need a 5.2% gain to break even. Easy. If you lose 20%, you need a 25% gain. It's getting harder. If you lose 50% of your account, you don't need 50% to recover. You have to double your money. You need a 100% gain just to get back to zero. And if you lose 90%, you need a 900% gain just to break even. 900%. Stop and think about that. That is exactly why professional traders are not obsessed with making money. They are obsessed with protecting money. Making money is just a result. Survival is the requirement. Act 2: The psychological shield. Risk management isn't just about protecting your wallet, it is about protecting your mind. When you take a massive loss, your psychology fundamentally changes. You stop looking at the chart with logic and you start looking at it with sheer panic. You revenge trade, you double your lot size, you aren't trading the market anymore, you are fighting your own desperation to win the money back. But imagine you only risk 1% of your account per trade. You take a loss, what happens? Nothing. It's a tiny scratch. You are still calm. You can look at the chart, shrug, and wait for the next setup. Stop losses are not a sign of weakness. They are not an admission of failure. A stop loss is simply a boundary of self respect. It is you telling the market, I am wrong, and I refuse to let this small mistake become a total disaster. Act 3: The casino math. Let's destroy the biggest myth in trading right now. You do not need a high win rate to make money. Beginners are obsessed with being right 90% of the time, but professionals know that trading is just a game of probability. Let's look at a classic structure. Imagine you take 100 trades. Every time you lose $10. But every time you win, you make $20. This is a 1 to 2 risk reward ratio. What happens if you are a terrible trader and you are wrong 60% of the time? You lose 60 trades, so you have minus $600, and you win 40 trades. So you have plus $800. You are wrong way more often than you are right, and you still walk away with $200. It does not matter whether you are right or wrong. What matters is how much money you make when you are right and how much money you lose when you are wrong. Act 4: The 6-month rule. So, why do people still fail if the math is that simple? Because their expectations are completely broken. You see a TikTok of a 16-year-old doubling their account in a week, and you think that is normal. It isn't. If making 100% a month was easy, every bank in the world would be doing it. A realistic professional target is aiming for a stable 5% to 10% a month. Sustainable always beats fast. If you want to actually make it in this industry, you need to follow the 6-month rule. Build a clear trading plan. Write down your starting capital, your maximum daily loss, your exact entry triggers, and your exact risk reward ratio. and then you follow it for 6 straight months. No changes strategies after a bad week, no jump into a new time frame, no tweaking indicators. You execute the system like a robot for half a year to let the probability actually play out. If you fail after 6 months, it is only for one of these three reasons. Wrong system, you don't have a mathematical edge. Wrong money management, your risk per trade is way too high. Wrong psychology, you simply aren't following your own rules. After all the fancy indicators, all the sharp patterns, and all the secret strategies, trading comes down to one profoundly simple thing: survival. Risk management will not make you a millionaire overnight. It won't give you glamorous stories to brag about at parties, but it will keep you from dying early in the market. You don't need to be the fastest, you don't need to be the smartest, you just need to be the person who survives the longest. Because in this game, the last person standing is the one who takes home the prize. If this video helped ground your trading psychology today, please hit that like button and subscribe to Market Sector. It costs you nothing, but it helps us build a community of real disciplined traders. Drop a comment below with your current risk reward ratio, and I will see you in the next video.